we have an agenda before us. Item number 18 will be withdrawn. Are members happy then to approve the proposed agenda, except for item number 8, Advocate Sithole? Thank you, members, for that. Item number 4 of the agenda is the declaration of interest. The forms have been uploaded, members, for you to complete the forms and then submit them to Mr. Eliezer Dlamini. But if members have any interest to declare by exception or verbally in this meeting, you have the opportunity to do so if there is any. If none, members, please remember to complete the forms that have been uploaded. Members, I would like to move right away to item number 5 on the substantive agenda items that needs to be discussed today, starting off with the final assessment of SLG's application for the maximum price for the period 1st July 2023. Please introduce the matter and highlight the key areas for the attention of the members and take it as read.
Thank you, Chairperson. Good morning. For the period July 2023 to June 2024, SLG is applying for a maximum price of 137.35 for end users of 110.47.37 per gigajoule. This maximum price is adjusted in line with the underlying contract. So the first batch is from September, it's from July to September, and then from October to December it gets adjusted in terms of the underlying contract. We received the application on the 28th of July, and our procedures in terms of the cost plus methodology, in terms of the tariff guidelines, in terms of Prudence Gas had an opportunity requested to come and present to the PGS since submitted to NESA. The application is here for recommendation to the ER. We request the members to recommend to the energy regulator to approve the application. Thank you.
Thank you, Ms. Sigeno. Members, the submission is before you for comments, guidance, enhancement. By show of hands, members, if you have any. Any questions, members? Mr. Mkiza, please go ahead.
Yes, I just want to get clarity around the issues of the frequency of review. So I suppose it means this one is reviewed on a quarterly basis. Just want to get that clarity or confirmation in my understanding, as opposed to others. Thank you.
Thank you. Thank you, Mr. Mkize. May you please respond, Ms. Sigeno and Ms. Makot?
Yes, Mr. Mkize, you remember in the public consultation, that is one of the issues that they raised, that they request that their price be adjusted on a quarterly basis in line with their underlying supplier, the Sasol Gas. And then it was agreed that it will, in fact, be they were given that that permission, that they are allowed to adjust their price in line with their underlying supplier, Sasol Gas and Kwande. Thank you.
Okay, we must not divulge confidential information regarding the sources of supply or the suppliers of this licensee. So let's just keep the information that the public is entitled to. Thank you for that. So it will be adjusted on a quarterly basis to be able to follow any other adjustments that will impact on the maximum price. Mr. Pukula, you may go ahead. Thank you.
Thank you, Chairperson. Chairperson, just on table 5 on page 6, I just need some help in confirming that the numbers that we had calculated on the NESA column are correct. don't seem to be getting the same numbers, like the total trading cost, which is a sum of the margin, operating cost, depreciation. Can we just get confirmation that those numbers are correct?
Thank you, Mr. Pugula. Ms. Makota, please, can you please come in there and just clarify those numbers?
So we have verified the numbers also with SLG, and they also provided their own calculation, which agrees with what we had in terms of the information that we have. But we'll also verify it after the meeting, just to make sure that we are again 100% correct. Kunjula, you can also add.
What the question is about, the numbers that NERSA has. SLG has provided its own numbers, if I may clarify. Now, NERSA has its own numbers so that it can do verification. Now, the question is on the NERSA numbers, especially when it comes to the other components there of the trading cost calculation, if you can confirm that.
Yes, Chair, from our side, we can confirm that we have verified the numbers, but I also acknowledge that perhaps we need to once again verify it after the meeting, but I can confirm that we have verified the numbers.
Mr. Pugula, do you have a follow-up on this? Maybe just to assist the team there to sort of maybe point to the
Chairperson, I'm trying to to just put them on a spreadsheet, because I had notes that it didn't add up when I was reading, but I didn't recheck them, so I'm quickly trying to put them in. But the note I had was that it does not add up, the numbers, and therefore that percentage may. I mean, it doesn't change the decision we are going to make, but it's not accurate.
Yes, the difference. Let me take Mr. Kotora. He might also may have picked up something as well. Mr. Kotora?
Yes, thank you, Chair. Chair, I think the difference, which will be corrected after the meeting, I'm noting that on the working capital, we accepted the SLG calculation. But on the table in question, there are differences in our working capital figure. So we may have copied the table without first checking, or there was some error in the copying of the table onto the submission, Chair, which can be corrected, because if you see the explanation on the working capital, we accepted the calculation.
Yeah.
But the figure that's on the table is not the one that we accepted. So I think that can be corrected, Chair. And yes, Mr. Bukula, you are right. Say, I also checked and saw that maybe if you just calculate as it is, there were some differences, but we can then correct and align with the reasons we gave.
Be close to what we normally, take it as a benchmark, so that it does not, it's not tantamount to us as setting. Because I think that confirmation, if it can be done very quickly, as I'm taking comments, Mr. Kotora, I can see on the working capital, the difference is quite huge there. The figure that we have put from the figure that was submitted by SLG. So if you can do the just to add up the numbers, but also maybe if you can check if we have accepted the SLG, take the figure for SLG and see what the difference will be. I'll come back to you before we take the decision, so that we know what is it that we are recommending to the energy regulator, and that we are comfortable that it does not exceed the benchmark that we normally take into consideration. Please, Ms. Makota and Mr. Kotora, if we can get that before the decision. Advocate Stolle?
Chair, sorry, I don't know what happened. It's a mistake. I apologize. My hand was not supposed to be up.
All right. Okay. Not a problem. All right. Are we able then to sort of give the committee some comfort in terms of the figures?
Yes, Chair. If we use the same figure as SLG used,
Yes.
we will be within that normal band we use, Chair.
Okay. And then what is the difference? Are you able to tell the difference? Just on the total trading cost?
Let me, I just done the total without comparing it with the other one, Chair. If you give me a few minutes, I'll confirm that.
No problem. No problem. Let me take Mr. Ndanzi and just the correction there. Mr. Ndanzi, and then I'll come to Mr. Gumede. Mr. Ndanzi?
Yeah, Chair, I was going to, in the interest of time, propose that perhaps if the subcommittee agrees, they delegate this part to you, then you report it as a matter arising so that you don't get involved in doing the actual work here in the meeting. Thanks.
Okay. All right. Thank you. Mr. Gumede?
Chair, I was going to recommend firstly, just to indicate that if the working capital is the same on numbers, then there won't be any differences because the only source of difference was that working capital. But nonetheless, I just wanted to recommend something. It's quite clear that when we're working with these tables, the people that generate the tables themselves, it's very easy to look at the number but put a different number. That we need to work out a mechanism where, for people from GAR, if there's a GAR calculation, that number is actually checked by somebody else from PPR or from ELR, because it's quite clear that with numbers, those challenges do come in, especially if you are actually transcribing numbers and it's not based on models. It's one thing if we're just extracting from the same database and we're actually using models to do that with these financial models. But if it's going to be numbers that are punched in, clearly we do need to have a mechanism. And that's what I'm going to suggest, Chairperson. Thanks.
Okay. All right. Thank you very much, Mr. Gumede. All right, members, I would like then to, so just to go back to that table to indicate that the working capital there from the NERSA side for verification, it will be the same as the one that was submitted by SLG, and it will also be a part of the audits that will be done to the extent that the team has some questions there. So the team will make sure that it will be audited as well. So if I were to take you members then to the recommendations, the recommendations are on page 13. On page 13, paragraph 14. It is recommended that the pipe gas subcommittee recommends to the energy regulator to approve the maximum price of 137.35 per gigajoule for the period 1st July 2023 until September 2023. This is a quarterly one, since it's going to be adjusted, and then for the next quarter it will be the amount that is on table 8, 132 for traders, and then 142 for end users. And then to approve maximum price, the maximum price that it is exclusive of VAT, discounts are allowed, and the decision of the energy regulator becomes effective on the date that the energy regulator takes that decision. The licensee is also required to apply for the next maximum price 4 months before the expiry of the approved price. And also the committee to approve the decision itself as read out, as well as the reasons for decision as attached in Annex A. Members also just to take note in terms of the resolution that a mechanism will be found so that we try and minimize inaccuracies or errors in the calculation, and also the verification there of the actual difference after the meeting before it goes to the ER. Members, by show of hands. Thank you, Mr. Pukula. Any member who supports the decision has been read out? Thank you, Mr. Mkhize. Thank you, Advocate Stoller. Thank you, Ms. Mpongose. Thank you, Mr. Gumede. I also support it. Thank you, members. I am moving on, members, to the next submission, which is the final assessment of Kwande gas maximum price application, again for the period starting 1st July 2023 until June 2024. Please take the matter as read and highlight the key areas of this application.
Thank you, Chair. This is Kwande's final assessment for maximum price of 110.5 per gigajoule for July 2023 to June 2024. The application was received in July 2023 and it was assessed in terms of the NESA process. It went through the public consultation and we received no public comments. We've assessed and then we have allowed all the expenses that are used in the trading cost calculation on the basis that Kwande will submit the audited statutory financial reports when they next apply for the next maximum price in the following year. We request the PGS to recommend to the energy regulator to approve Kwande application. Thank you very much.
Thank you, Mr. Kenu. Members, the application by Kwande is before you. If there are any questions of clarity or maybe areas of enhancement from the members or guidance, members may raise their hands. Okay. Mr. Pugula, please go ahead.
Thank you, Chair. On table 8, I also just wanted assistance around the difference between the total RAB, whether this is also one similar to the one that we've looked at, but it's a huge number, same as the working capital, and I did try to read what was in the reasons for the decision, but maybe I can just be assisted to understand a bit more.
Yes. Okay. Thank you. Ms. Makota, can you check that? Because we usually look at the trading regulatory asset base, the TRAP, and we also have item 3, which is the RAP. There, can you also just clarify those? Maybe there could be a mistake. I know that here we took the RAB, we don't have anything on the TRAP. Ms. Makoda?
Yes, Chairperson, I will be assisted by Kunjula on this one. In terms of the information that we received from Kwande, they did indicate that they don't have assets from their side, but I want to ask Ms. Genu to explain the information as per what we received from the applicant.
Let me take Mr. Kumede's hand first. Mr. Kumede, so that we can respond to all the questions. Mr. Kumede.
Chairperson, can I request that this one again not be responded to, just be checked. There is an obvious error there in terms of how the numbers are actually presented. I mean, I know Mr. Pukula is trying very hard to be polite, which is the way to go. But clearly, you have a number provided by Kwande for working capital. When we then look at the NESA column, it's a vastly different number. The same applies. The same applies with the total RAP. Can we just take this offline again, please? It's not. Can we not try to respond to it? It just needs to be corrected. Thanks.
Okay. All right. I think it's also it also affects the margin as well. If you look at the margin, because there will be that a difference on the margin, and then also the tax. I don't know why the difference on the huge. Okay, but if members are comfortable that it can be taken offline, and then in the chairperson's report, it will then be dealt with when the matter goes to the ER. If members are happy with that, members. with the thumbs up, members, if you're happy with that. Thank you, Mr. Pukula. Thank you, Mr. Kumete. I'm hoping that members are also happy. Other members are also happy. Thanks, Mr. Mkhize. All right, members, with that, that is table number 8, which will, because if it affected the working capital, and I think the work has also been, sorry, they double checked the tax as well, that we are correct. We've taken the right figures when it comes to tax. Then we are on now page number 9, which is the recommendations. The PGS subcommittee is requested to recommend to the energy regulator to approve Kwande Gas's application for the approval of the maximum price of gas for the period 1st July 2023 until 30 June 2024, and also to approve the decision itself, as well as the reasons for decision. I think here the decision, members, if you can just move to page 11 so that you know exactly what is being approved, it will be the table there on page 11, which then shows what the maximum price is. If also the team can just put that decision as is here. If there are any adjustments, also put the adjustment, the frequency of the adjustment of this. So to insert the actual decision under paragraph 31, so that the members can see that, and that table that shows how much Kwande will be charging to its customers. Members, by show of hands, with that little adjustment there on the actual table, just as well as to check, double check the numbers. Are you happy, members, to then approve the recommendations to the ER?
Chairperson, sorry, I just wanted to check if the recommendation shouldn't be subject to the corrections of those issues raised in table 8, subject to verification of those.
Yes, it will be subject to that verification of the figures, and it will also be dealt with in the chairperson's report that is going to the ER.
Okay, comfortable. Thank you, Chair.
Okay. Thank you so much. All right, I saw Mr. Pukula's hand was up in support of the decision. Mr. Kumete, Mr. Mkhize, Ms. Mpongose, I also support Advocate Sithole. Thank you very much. Thank you, members, for that. All right, we then move on to SLCNG application for the maximum price for the period 1st July 2023. Can we please now anticipate some of these questions, because we're getting to the 3rd submission. So it becomes important that you indicate this if there is any difference, and also indicate what difference does it make in the maximum price. Somebody's mic is on. If you can kindly switch off your mic.
Thank you, Chairperson. This is SLCNG application for maximum price for the period July 2023 to June 2024. SLG is applying for a maximum price of 305.37 per gigajoule for the period for the period of July to September, which will be adjusted in line with the underlying contract on October to December. That is on a quarterly basis. We've accepted all the requirements. I mean, we've accepted all the requests in terms of the trading cost. We've accepted all their forecasted figures, which will be verified once we receive the audited financial statement. We have not adjusted any figures in terms of this application. So then we are requesting the PGS to recommend to the ER that it approves the maximum price of 315.37 for a period of July to September, and 308.98 per gigajoule for October to December. Thank you, Chair.
Can you please also just complete the explanation when it comes to the depreciation, which is not provided for? And maybe it will be important to show to indicate that the business model is different here because this is the sister company of SLG. And this one focuses on the compressed natural gas, and therefore the assets are slightly different.
This SLCNG is a sister company for SLCNG, and is supplied by SLG, and is for its natural gas, and they are operating from the same premises. And then it is the gas. It's not natural gas; it's compressed natural gas. And then in terms of the assets are different, and the depreciation and all. So what we have done when we assessed the assets that are used, the collective assets, to ensure that there are no duplication in terms of cost and the allocation. And then all of these assets and expenses will be confirmed.
Now, Kunjula, please, all that I'm asking, so that members can, because the figures are very, very high here. And please relax, and so that, because you have to explain to the members. The natural gas is natural gas, whether it is now compressed for other purposes. So all that I was asking is that in this case, because they've got certain assets like compressors and all of those are the assets, whilst the other one did not have assets, it just takes the gas from the pipeline, and then it then makes sure that there's an arrangement that gas be delivered to its customers through the pipeline. So this one is very different, because there will be compressors and will be all of those other assets that will take the gas from point A to point B. So that's why you see on the trading regulated asset base, you've got that big figure that we didn't have on the other one. And then I'm saying, can you please explain to the members why depreciation is 0 on those assets? That's what I'm asking, because we're allowing them. There's the figure for the assets. So why is depreciation 0?
What we have taken in terms of the trading cost calculation are the assets that or all the line items that SLCNG has applied for. Where they have not applied for the depreciation because their assets are fully paid, we have not verified that. But what we have done, we've taken all the line items that they have applied for, and then we have accepted them as they were. And then in terms of their assets are infrastructure assets and compressor assets, which are not which are different from the trading assets. That is the explanation that I'm offering.
Mr. Bokula?
Thank you, Chair. I also want to refer to Table 5, but I think this time something different, because when I go to the reasons for the decision, the taxation or the tax, we say that we have accepted like 4.27. We say NESA has accepted the tax applied for, and the actual tax is subject to verification. But in the table, we have not accepted that tax. Or am I reading the wrong part?
Thank you, Mr. Bokula. Mr. Mkhize?
Thanks, Chair. I'm partly covered by what Mr. Bula said, but I'd just like to also understand, because the application on table 2, right? I found that the depreciation of 0, and then my understanding is that if that is what they've applied for, it should be reflected as such. But then, if then with a question of saying, what then do we apply from our side? And then the question that I want to have to put forth here is, what happened in terms of pre-application engagement? so that there is alignment on some of these things. Just want to get to understand that. Thank you.
Thank you, Mr. Mkhize. Ms. Magoda, and yeah, if you can please respond. Samuel, if you may also just come in afterwards.
Thank you, Chairperson. I want to respond on the issue of tax. It is correct that we did not accept what the applicant has applied for. If you check on that table, we did reflect that there is 49% difference from between our calculation versus what the applicant has applied for. And paragraph 7.25 of the RFD, that's where we try to explain where the differences are emanating from. You will note that we have excluded the deferred taxation and disallowed the amortization allowances on the intangible assets, and hence now the difference. I'm hoping that Ms. Sigenu will go into the details in terms of how we calculated the tax. But Chair, Mr. Bukula is correct in that we did not accept all the taxation that the applicant has applied for, and hence the table there reflects the difference. Now, in terms of Mr. Mkhize's question on the pre-application engagement, we've had several engagements with the applicant, and even after the public hearing, we've had several engagements where we also were given additional information, especially on the adjustment of the GE itself, and the submissions were updated after the engagements with the applicant. Thank you, Chair.
Okay, so the explanation for tax is on paragraph 4.26. And also the methodology explains that. Let me give Mr. Bugula and see if Mr. Bugula is happy with that explanation. Mr. Bugula?
Thank you, Chair. I maybe I just need to redigest what's written here, because I think I saw the part that says it's accepted, and I just need to go and check the other part that Ms. Makota is referring to, and I'll be fine. But nonetheless, I think even in this table, even if we do that, we just need to use a different spreadsheet and a different calculator, because if you add your operating expenses, depreciation, and taxation, you are not going to get the same number that we are getting as NASA.
Okay. All right, Mr. Bugula. I think if you can take note of those as we just to see if the numbers will tally. And I think that will be important when we take the matter to the ER. If Mr. Bugula and the members can allow the team just to do the verification on the NERSA side, it might not change the decision at all, because you can see that if we take what the licensee has applied for, you will see that the difference will still be below the normal benchmark, except the fact that there's disallowance of the, what is it? Is it the amortization that has been disallowed there? And Mr. Bugula is quite right there on paragraph 4.24. So on paragraph 4.24, we talk about they talk about the accumulated depreciation which was allowed, and then 4.25 is the explanation of what the guidelines or the methodology provides, which is the flow-through tax as well as the normalized tax. So once you choose it, you stick to it, so you don't change it. So if that can be checked against paragraph 4.26, just to see what difference it would make when we apply the methodology against that table. So members, if members are happy with that approach, that the verification there and the adding up of those numbers be done and shown in the chairperson's report going to the ER, I'll be happy if members can agree to that proposal. Members, can we now go to the recommendations, subject to the issue of the text being double-checked, as well as the numbers on the table being added up and see if they tally that the members of the committee have requested. Now I'm reading out the decision that is required from the committee, which is that the committee is requested to recommend to the ER to approve the SLG CNG maximum price of 315 for the period 1st July 2023 up until June 2024, but that price will then be adjusted on a quarterly basis. If it's adjusted, then table 1 shows what will be the maximum price for the first quarter until September. It will be 315. That will be monitored. And then for the second quarter ending December will be 308 per gigajoule, and that the price will be adjusted on a quarterly basis. This maximum price is exclusive of VAT. Discounts are allowed in line with Section 22. The decision of the energy regulator will be effective on the date that the energy regulator makes that decision. The licensee must apply for the price 4 months before the expiry of the approved price. The decision be approved, as well as the reasons for decision. Members, by show of hands, if you agree with that, subject to those comments and corrections. Thank you, Mr. Bukula. Thank you, Mr. Mkhize. Thank you, Advocate Stole. Thank you, Mr. Kumede. And thank you, Ms. Bongose. Thank you so much, members. We now move on to item number 8 of the agenda, which is the maximum price for Evra's high-felt steel and vanadium application for the maximum price starting from 1st July 2023. Please take the matter as read and highlight the key areas of the submission. Mr. Bukula, is that a legacy hand from your side, or maybe you want to raise something? Thank you, Mr. Bukula.
Apologies, Chair, it was. Thank you.
Thank you, Mr. Bukula. All right, Ms. Makota, who's dealing with this application?
It's me, Chair.
All right, please go ahead.
Audible. Thanks, Chair. I'll take the matter as read. This is Everest's application, maximum price application for the period 1st July to 30 June. And the purpose of the submission, we're requesting PGS to recommend to the energy regulator the maximum price as per table 1, and that the approved maximum price would be exclusive of VAT. Also, that discounts are allowed and be applied in accordance to a non-discrimination provision of Section 22 of the Gas Act, and that the date of the energy regulator's decision on this matter becomes effective date of the maximum price for monitoring purposes, and the maximum price remains effective until the date of approval of another maximum price by the energy regulator. And lastly, that the licensee is required to apply for the next maximum price 4 months before the expiry of the current approved maximum price. You'll notice, Chair, it's just the last decision. If we could, as per previous decision on the ER, think when the submission was done, that was still it was still effective from an ER president's perspective. And then when it comes to the application itself, Chair, the applicant used a cost-plus methodology, which was also used to assess the applicant's application. And the differences between NERSA's calculation and the applicant's calculations were purely from a valuation perspective, and also there were also timing differences. and also which cascaded then to the margin differences there. So the difference is 2%, which is in line or below 10%, which is the threshold as per NERSA's precedents. I think, Chair, that's from an analysis perspective, and then the recommendations are as per number 14.
Yes. Please, before you must just clarify before you the calculation of the trading cost on table 5. For instance, on the net working capitals. So you must anticipate the questions that were already asked. And you will see there that there's a 0 there, and it cannot be 0 because you can actually see that there is a difference from NERSA's figure as well as EVRA's figure. EVRA has given us a lower figure. NERSA has taken a quite high figure for the net working capital, and it's not right then to say the difference is 0 there. Just explain to the members and deal with the fact that it's not a 0 because the figures are different. And also, there's a huge difference in terms of the RAB. If you can just give members the comfort as to what happened there.
Okay, with regards to the RAB, Chair, what happened is that there was a technical. The actual licensee, there was a revaluation that took place of the assets, but the revaluations were not a net of accumulated depreciation. So from a NERSA's perspective, we took that into effect, which made the differences there. And then what happened is, I think the number E is inclusive of the net working capital. So the figure there, it will be, so the difference is, that's the 17%, which is inclusive of the net working capital change on top.
D.
Yeah, D, yes, number D. So E is inclusive of number D. So when you calculate E, it's the RAB, which is A, and then also which is net of the net working capital itself. Which gives you the figure. So you add the two to get to the. I
understand that. I understand the adding up. I understand the formula. Please, I need to go to the members. All that I'm asking you to do, I'm saying just on D alone, the figure by NERSA is different from the figure from the applicant. That's all. Just D.
Oh, Chair, the major differences in terms of the calculations, otherwise they have been, it's just maybe what happened is that when we were pulling in Excel, it didn't bring that up, but it is been factored in on E. But the technical differences there is purely on the days of the calculation in terms of the net working capital. So from a receivable perspective, also from a payable perspective. So the assumptions that were made by the applicant were, from a NERSA perspective, the standard is 45 days, and the applicant the days were 30 days. So this is from an estimate perspective when you're estimating the net working capital. Otherwise, it was just because otherwise, Chair, the difference there is the 17%, basically.
Okay.
Yeah.
All right, Mr. Pogula.
Below. Also, Chair, just before I end, I think table 4, also on the submission, there's just the NERSA calculation is actually Everest calculation, and the Everest calculation is NERSA calculation. So on the pasting, there was just those overlaps there. Otherwise, that's it. Thanks, Chair.
All right, thank you, Mr. Pogula.
Thank you, Chair. What the presenter just pointed out was the first thing I was going to point out, and secondly, and just say that maybe we take the same route as we had done with the other ones that colleagues must check. I know that if we go to the the actual number that we are going to. I mean, the percentage difference is not huge, but it doesn't give any confidence when you have tables that are referring to wrong numbers because tables have been swapped, and it's not difficult to see that part that it's been swapped, but it just is an indication that there's been some sloppiness that has crept in these submissions. So to save the committee time, can we just get these things right? And I think that the differences are not huge, as you were pointing out as well, Chairperson, on the variances, that those variances numbers are not right. But just that does not give confidence. Thank you, Chair.
Thank you. Thank you, Mr. Pukula. You summed it up nicely. Mr. Kumet?
Chair, I just thought that I'll also just reemphasize the issue. I think sometimes as management, we tend to want to justify. Management tends to want to justify things that are not justifiable. That table 5 is not correct, Chair. The significance in terms of the decision that needs to be made, perhaps it might not be that significant. But we do need to. I think. If we agree on a process forward that simply says, let's not try to justify the table because it's got numbers that just don't make sense. But they can clearly be understood, perhaps. And if you look at the contribution in terms of the trading cost versus the decision that is sought in terms of the maximum price, perhaps it's something that can be overlooked. For now, but overlooked, but needs to be fixed before this matter goes to ER. But I think for me, just the request, Chair, is that the same thing happens with ELR. It's the numbers are a challenge. They always need somebody else, a fresh eye, who can clearly pick up that we may have swapped the columns around or we may have swapped rows around, because in the previous one, I think it's just the rows that were swapped around, and that is easy when we are typing things in. That's all I'm just going to ask. Let's not justify them, let's not waste too much time on them. But clearly, it does not bring confidence if the numbers, especially in the submissions, if the numbers are incorrect. The question what happens to the rest of the analysis. But for me, is just to say, let's put a process, please, Chair.
All right, thank you very much, members. Members, with that, obviously the figures there, as you've indicated, there's a problem of swapping the figures there on the tables, so the tables will be verified. And then before the matter goes to the ER, and then the ER's attention will be drawn to those areas that the committee has indicated. With that, members, then I would like to take you to paragraph 14 on the recommendations. The pipe gas subcommittee has been requested to recommend to the ER to approve Evra's high felt steel and vanadium's application for the maximum price for the period 1st July 2023 until June 2024. And the table 1 shows that price. The team must also just indicate whether the maximum price is confidential, which it should not be. It's just the components that are on table 1 that should be confidential. So that maximum price is 143, and it is discrimination of price differentials. And the NERSA's decision on this matter becomes effective on the day that NERSA has approved, and the licensee must apply for a new maximum price 4 months before the approved one expires. And again, NERSA is required to approve this entire decision as well as the reasons for decision as annexed here as Annexure A. By show of hands, members, if you approve the decision as read out. Thank you, Advocate Sithole. Members, are you happy to approve? Thank you, Ms. Mpongo said. Thank you, Mr. Kumede. I also approve. Thank you, Mr. Pukula, and thank you, Mr. Mkhize. Thank you, members, for the support. I'm moving on to item number 9. Item number 9 is the report on the monitoring of Transnet pipelines compliance with the approved transmission tariff for the period April 2022 until March 2023. Please take the matter as having been read and highlight areas that are important for purposes of monitoring of compliance.
Thank you, Chairperson. Before members is the monitoring of the Transnet's compliance with the approved transmission tariff for the period 1 April 2022 to 31st March 2023. Chair, the report is for noting by the committee. To conduct this monitoring, Transnet submitted its pricing schedule showing the volume sold as well as the price charged to its customer over the review period. The analysis of the information provided shows that Transnet complied with Section 4H of the Gas Act by charging its only customer a tariff that is equal to the approved tariff of 7 rand, 71 gigajoules for the period 1 April 2022 to 31st March 2023. Chair, this analysis is reflected under Table 2 of the report. In terms of their compliance with Section 22 of the Gas Act, the monitoring shows that Transnet cannot price discriminate since it has only one customer under the review period and therefore has complied with Section 22 of the Gas Act. Chair, the reports also look at the actual volumes handled in comparison with those approved by NERSA in their application. And it shows that Transnet's actual gas volume transmitted through this gas pipeline was slightly below the NERSA decision by just 1.39%, which may potentially attract clawback in their next application. Lastly, Chair, it is therefore requested that PGS members note that Transnet has complied with Section 4H of the Gas Act when it's charged its only customer a tariff approved by NERSA for the review period, and also that Transnet complied with Section 22 of the Gas Act as it did not unduly discriminate between customers when charging a tariff for the period 1 April 2022 to 31st March 2023. Chair, recommendation are under page 9. Thank you.
Thank you, Mr. Pukula. Your hand, I think, is a lingering one, but may I then give members the opportunity to ask questions of clarity, if any, or maybe any guidance for the next compliance report? By show of hands, members, if you have any comments on the submission. Any comments? If no comments, members, I would like to then take you to the recommendations that are on the page 9, the overstamped green numbers. Paragraph 14. Paragraph 14. The Pipe Gas Subcommittee is requested to note that Transnet has complied with Section 4H of the Gas Act when it charged the transmission tariffs approved by the energy regulator for April 2022 up until 31st March 2023, and that Transnet complied also with Section 22 of the Gas Act, as there are no incidents of price discrimination in the way that it charged the tariffs during the period. By show of hands, members, if you are happy to note the compliance report. Thank you. Thank you, Mr. Gumede. Thank you, Advocate Sitole. Thank you, Ms. Mpongose. Thank you, Mr. Mkize. I also happy to support Mr. Pukula.
Yes, Chair.
Thank you very much.
Chair. I don't know what happened to me, Chair. Yeah.
Okay, thank you. Thank you, Mr. Pukula. Item number 10 is also a monitoring of compliance.
On a lighter note, I was going to say I support, but on item 5.13, let's allow equal to also not be confidential. That's on a lighter note, Chair.
Yes. Item 5.
5.13 on what we have approving, that let's allow
Yes.
equal not to be confidential.
Yes, okay. All right. Okay, thank you, Mr. Pugula. Item number 10 is the monitoring of compliance report. This time is for Columbus Stainless Steel, Pty Ltd. Advocate Sitole, your hand is still up. I'm not sure if you want to raise something or is a Likasi hand. Thank you. All right, can you please introduce this this report? Please take it as read.
Thank you, Chairperson. Again, this is another monitoring report, but for Columbus Stainless Steel's compliance with the approved maximum price for the period 1 January 2022 to 31st December 2022. Chair, the purpose of this report is for noting by the committee. Chair, the monitoring of Columbus compliance with Section 211P of the Gas Act, it shows that they have charged its customers a price that is below the approved maximum price of 146 Rand, 91 per gigajoules for the period under review, and therefore they complied with Section 211P of the Gas Act. Chair, this analysis is reflected in Table 2 of the report. In terms of Section 22 of the Gas Act, since Columbus has one customer again for the period under review, it cannot price discriminate and has therefore complied with Section 22 of the Gas Act. Chairperson, it is recommended that the Pipe Gas Subcommittee note the following: that Columbus complied with Section 211P of the Gas Act by charging its customer an actual price that is below the approved maximum price for the period, and also that Columbus complied with Section 22 of the Gas Act as it did not unduly discriminate between customers. Chair, the recommendation are under page 9. Thank you.
Okay, thank you very much. You can just double check paragraph 9 if that information is not confidential with regards who the shareholding of Columbus Stainless Steel. I just want to make sure that it is not mentioned to the extent that it is confidential. Other than that, members, if you have any comments with regards to the compliance, the nature of compliance by Columbus Stainless Steel, members, you may then raise your hand if you have any comments on this submission. If none, members, I would like to take you straight to the recommendations that are on page 9 on this submission. The Pipe Gas Subcommittee is requested to note that Columbus Stainless Steel complied with Section 211P as it did not charge a price that is above the approved price of 146 for the period January 2022 until December 2022, and that Columbus also complied with Section 22 of the Gas Act as it did not unduly discriminate between its customers. By show of hands, members, if you're happy with the decision to note that compliance. Thank you, Mr. Pugula. Thank you, Mr. Gumede. Thank you, Ms. Pongose. Thank you, Advocate Stoller. Thank you, Mr. Mkhize. I also support. Thank you very much, members. The item 11 as well, members, is dealing with the compliance report. This time it is for Mozambique Pipeline Investment Company, Pty Ltd. That is ROMCO, the compliance by ROMCO with the tariffs. Mr. Mkhize, do you want to raise something? Sorry, unless it's a lingering hand.
I just wanted to say I'm about to bow out parties.
Okay, all right, Mr. Mkhize. Thanks. Mr. Njezula, your mic is on. Are you presenting? Please go ahead if you are the one presenting the ROMCO one.
Yes, Chair. Thanks. I'll take the matter, the submission as read. This is an annual report that we do to monitor ROMCO's compliance with the tariffs for volumes of 120 million gigajoules for GTA1. Also for the tariffs of 33 million gigajoules which is GTA 2, and lastly, for volumes of 7.8 million gigajoules per annum, which is GTA 3. This is for the financial year ended 30 June 2023. The purpose of the submission is to request the committee to note ROMCO's compliance with Section 4.2.4 of the PIPE agreement for charging its customers volumes below 120 million gigajoules for the 2023 financial year, and also ROMCO's compliance in line with Section 4 of the Gas Act for charging its customers tariffs for volumes of 33 million gigajoules for the same financial year, which is 2023, and also ROMCO's compliance with Section 4 of the Gas Act for charging its customers a tariff for volumes of 7.8 million gigajoules, which is GTA 3, for the same financial year, and also from a compliance with Section 22 of the Gas Act. And then from a assessment perspective, ROMCO has complied with GTA 1, 2, and 3. From an inside perspective, from the GTA 3 perspective, the volumes there are way lower than the capacity of the GTA 3. Given that the volumes were less than around about 30% of the capacity. Then I'll take members to the recommendations, which are in number 15, as they will be as per number 15. Thanks, Chair.
Thank you, Mr. Jesula. Members, the compliance report for ROMCO is before you for consideration. If you have any comments or areas of enhancements or guidance, by show of hands, members, if you have any. Are members happy with the compliance by ROMCO and noticing that the volumes are a bit low for the third asset, which has a very expensive tariff here. So if one notices the volumes coming from Mozambique to fulfill the assets that were added on the ROMCO one, are members happy to also just note that? If members don't have any questions on that, I would like to then take you to paragraph 14. The Pipe Gas Subcommittee is requested to note that ROMCO complied with Section 4.2.4 of the pipeline agreement when charging its tariffs for the volumes that are below 120 gigajoules, which is your gas transportation agreement 1, GTA 1 tariff, ended for the period ended 30 June 2023. And then for the second tariff, ROMCO complied with Section 4H of the Gas Act when charging its customers the tariffs that are below the approved one for the volumes of up to 33 million gigajoules, that is GTA 2, which is the compressor station that is in Komati Port. This is the tariffs for that. And then thirdly, ROMCO complied with Section 4H of the Gas Act when it charged its customers for volumes of 7.8 million gigajoules, that is GTA 3, which is the short pipeline that is located in Mozambique, and that is for that period ended 30 June 2023, and that ROMCO complied with Section 22 on price discrimination for all of the three GTAs or tariffs for those gas transportation agreements. By show of hands, members, if you are happy to note the decision. Thank you, Mr. Mkhize, Mr. Pukula, Mr. Kumete, Ms. Mpungose, Advocate Stole. I also support. Thank you, members. We're moving on to item number 12, which is the preliminary assessment of Vuma Gas's application for a maximum price of gas for the period 1st July 2023 until 30 June 2026. Please take the submission as having been read, also noting that it is still going out for public comment. Thank you.
Thank you, Chair, and good morning, members. This report is for the preliminary assessment of Vuma Gas's application for a maximum gas price for the period 1 July 2023 to 30 June 2026. On table 1, Chair, on page 4, it provides a summary of the maximum gas price applied for by Vuma Gas. Vuma Gas is applying for a maximum gas price of 222 Rand and 14 cents per gigajoule. Table 2 on page 4, Chair, provides a summary of the difference in the calculation of the maximum gas price between NERSA and Vuma Gas. The calculation resulted in a difference in the trading cost and the profit component. However, Chair, this difference is less than 1%. The difference in the trading cost, Chair, can be attributable to our computation differences in the work calculation as well as the tax expense. The work calculation differences as a result of the difference in the market risk premium figure used in determining the cost of equity. And then the difference in the tax expense, Chair, can be attributable to the work margin, that the difference that NERSA and Vuma calculated, as well as the omission by Vuma of the debt component that was supposed to be deducted when determining the tax in the flow through using the flow through approach. The recommendations, Chair, are on page 14, on paragraph 14 on page 8, Chair. Thank you.
Thank you very much, members. Any comments or guidance on this matter? Is still going out for public comment. By show of hands, members, if you have any suggestions, areas of enhancements on this submission. Any questions, members? If no questions, members, will then like to take you to the recommendations on paragraph 14. It is recommended that the PGS subcommittee note the preliminary assessment of Vuma Gas's application for a maximum price for the period 1st July 2023 until 30 June 2026. And the committee is requested to approve the publication of the discussion document that is attached here for public comment, with the information that is confidential being withheld. By show of hands, members, if you are happy to approve those two decisions. Thank you, Mr. Pukula. Thank you, Mr. Kumete. Thank you, Ms. Mpongose. Thank you, Advocate Sitole. Thank you, Mr. Mkhize. I also support. Thank you very much, members. The next submission is item number 13, preliminary assessment of Columbus stainless steel application for a maximum price of gas. Can we take this matter as read as well?
Thank you, Chair. A very good morning to you, Madam Chairperson, members of the PGS, executive managers, fellow colleagues, and lastly, a warm welcome to the members of the public who are joining us from various media platforms. Madam Chair, before I can get into my opening statement, I would like to, being apologetic to the members of the PGS, to say that I do acknowledge that we had erroneously reported some incorrect figures on page 5 under paragraph 4.11 and also on page 4, Madam Chair, under paragraph 4.7. Those two figures there, Madam Chair, they don't tie up to one another. So I've noticed that there seems to be no correlation between these two numbers. And I do agree with Mr. Kumete to say that there seems to be a going trend in reporting of these figures, Madam. I realized this morning when I was going through this submission to say that the numbers on paragraph 4.11 on the total trading cost, really, it doesn't speak to the one that I shown on table 4 under paragraph 4.7. So I would like to confirm to the members to say that I know this might have already created some confusion. So I want to clarify those situations to say the actual figure that is shown on page 4 under paragraph 4.7, it is the actual correct figure, and the one that we shown on page 5 under paragraph 4.11, Madam Chair, it is indeed incorrect. And I would like to highlight to the members to say that going forward, this is not going to happen. With future submissions, we are going to make sure that we really adopt a robust mechanism approach where we report the consistent leakage on these numbers so that they speak to one another. And with that in mind, Madam Chair, I would like to walk the members through the Columbus applications. I'll take the submission as read. And Madam Chair, the submission before this committee really is a preliminary assessment of Columbus Steel applications for the maximum price of gas for the period of 1 July 2023 to 30 June 2024. The purpose of this submission, Madam Chair, is to request the PGS to note the preliminary assessment of Columbus together with the approval of the publication of the discussion documents on the preliminary assessment for public comment with confidential information withheld as highlighted in Annexure A. Madam Chairperson, on the 6th of October 2023, the energy regulator received a Columbus Steel maximum price of pipe gas application for the period of 1 July 2023 to 30 June 2024. And the applicant in question, Madam Chair, really is applying for the maximum price of gas of 130.70 per gigajoule. From NERSA preliminary assessment standpoint, Madam Chair, we did assess the applications guided by our Cost Plus methodology. On page 4, Madam Chairperson, under paragraph 4.7, the table there really shows a negative of 0.9% variance between the energy regulator and the applicants on the trading cost calculations. And during our analysis, Madam Chair, I would like to highlight to the members to say that we noticed some few variables or elements, more especially the working capital calculations between the energy regulator and also the applicants, where there was a variance of negative 87.5%. Madam Chair, understanding the applicant's operating business model, really, this is a different applications compared to the other applications because the applicants, they are not in any business of trading the molecule. They are supplying this molecule to one of its customers that is based in Middelburg in Mpumalanga. So, Madam Chair, we assess the figure as it was given in the applications. And from NERSA's standpoint, really we forecasted that figure using the 45 average. And you can see the difference between what the applicant is applying for and what NERSA determined. The NERSA figure is lower than compared to what the applicant is applying for, Madam Chair. And also, we saw the element of the taxations there, Madam Chair, really necessitated or attributed to that negative 0.9% variance, Madam Chair, because the applicants followed the normalized tax approach, and whereas the energy regulator adopted the flow-through tax approach, hence we have that variance of 27.2%. Madam Chairperson. Madam Chairperson, I would like to move to page 6, Madam Chairperson, under paragraph 4.17. Madam Chairperson, the volumes that the applicant is applying for really has significantly declined by negative 32% compared to its previous volumes. And according to the applicants, they indicated to us when we were having the pre-engagement dialogues, Madam Chair, that the business has been undergoing restructuring plans, and that has resulted in the reductions of the volumes. Madam Chairperson, with that in mind, I would like to move to to page 7, where we perform what you call a prudency assessment from the applicant's operating business model. Madam Chairperson, I would like to highlight to the members to say that we did, from the CapEx standpoint on the applicant's application, we assessed the reasonability of the cost. And with NERSA as findings, Madam Chairperson, the NERSA assessment indicate that the applicant is not going to apply the discount across its different categories or segment per se. And also from the OPEX point of view, Madam Chairperson, NERSA's findings also indicate to say that the applicant with the course that the applicant is applying for, Madam Chairperson, we have performed or validated these figures as the additional informations were provided. We scrutinized this cost, and we did allow this cost that the applicant is applying containing this application. Madam Chairperson, I would like to take the members on our recommendations, which is found on page 9, paragraph 14.1, Madam Chairperson. I would like to thank you for indulging me for this opportunity to really summarize this application. Thank you, Chair.
Thank you, Mr. Malele, for the comprehensive introduction, and we take note of the error that you pointed out in terms of the swapping of the numbers and pointing out which number is correct. Members, with that, can you please raise your hands if you have any questions of clarity or some guidance in terms of this the discussion document itself and the covering submission, as the matter will be taken out for public comments for the maximum price that has been applied by Columbus Stainless Steel. By show of hands, members, if you have any questions. If not, members, I would like to then take you to page 9 with the recommendations. Members, with the error that has been pointed out, which will be corrected before the document is published for comments. With that, members, I would like the team is requesting that the pipe gas subcommittee, notes the preliminary assessment of the Columbus Stainless Steel application for the maximum price of gas starting from 1st July 2023 until 30 June 2024, in compliance, submitted in compliance with Section 21(1)(p) of the Gas Act. And then the members are now requested to approve the publication of the discussion document for public comment, with confidential information being withheld as shown in Annex A. Those are the two decisions that are requested, subject to the correction that will be made by the team before the matter is published for comment. By show of hands, members. Thank you, Mr. Gumede. Thank you, Mr. Bugula. Thank you, Mr. Mkize. Thank you, Mr. Mbongose. Thank you, Advocate Sitole. I also support it. Thank you, members. Members, we are now on item number 14, which is the report on NGV's compliance with the approved maximum price. Please take the matter as read and highlight key areas that show that NGV has complied with the previously approved maximum price.
Thank you, Chairperson. This report is on NGV's compliance with the approved maximum price of gas for the period 1 July 2022 to 30 June 2023. Chair, to monitor compliance with the maximum price for the period under review, NERSA requested NGV to provide relevant documents in the form of customer pricing schedules and invoices, and the licensee submitted the documents. Chair, Table 3 shows that NGV complied with Section 21(1)(p) of the Gas Act by charging prices that are lower than the approved maximum price for the period under review. Chair, the report also looked at NGV's compliance with Section 22 of the Gas Act, and NGV applied the same pricing to all its filling stations and charges for running the filling stations. Chairperson, there was therefore no contravention with Section 22 of the Gas Act. Chair, we recommend the PGS to note that NGV complied with Section 21(1)(p) of the Gas Act in the period 1 July 2022 to 30 June 2023 by charging below its maximum price of 109 Rand 5 cents per gigajoule, and that NGV complied with Section 22 of the Gas Act as it did not unduly discriminate between customers when charging prices in the period under review. Chair, thanks.
Thank you very much, members. The submission is before you for comments and input on the compliance by NGV. If there are any questions, members, please raise your hand. Okay, if members don't have questions, are happy with the explanation and the submission is straightforward. Members, I would like you to go straight to item number 14, paragraph number 14. It is recommended that the PGS notes that NGV complied with Section 21 of the Gas Act because it has charged prices that are below the approved maximum price. This is the previous methodology, that price that you see there. And secondly, to note that NGV has complied with Section 22 of the Gas Act as it did not unduly discriminate. By show of hands, members, if you agree and note those two decisions. Thank you, Mr. Pukula. Thank you, Mr. Mkhize. Thank you, Mr. Gumede. Thank you, Ms. Mpungose, and thank you, Advocate Sitole. I also support. Thank you very much, members. I'm moving on to item number 15, which is the report on the monitoring of virtual gas network, that is VGN, its compliance with the previously approved maximum price. Even this maximum price is in terms of the previous methodology when you see the figure there. Please introduce the submission.
Thank you again, Chairperson. This report is on the monitoring of virtual gas networks compliance with the previously approved maximum price for the period 1 July 2022 to 30 June 2023. VGN was also requested to submit pricing schedules and invoices, and the licensee did submit the documents, Chair. Table 4 shows that VGN complied with Section 21(1)(p) by charging prices that are lower than the previously approved maximum price for the period under review. The report also, Chair, looked at Section 22, and VGN applied distinguishing features that are in line with the Gas Act and that are approved by the energy regulator. Table 5 shows how these features are implemented for each customer, and analysis of how VGN distinguished between its customers as detailed from paragraph 4.24 to 4.26 shows that it complied with Section 22 of the Gas Act when charging actual prices to its customers in the period under review. Chair, we recommend the PGS to note that virtual gas network complied with Section 21 and that VGN had complied with Section 22 of the Gas Act as it did not unduly discriminate between its customers when charging prices in the period under review. Thank you, Chairperson.
Thank you very much. Members, the submission is before you. Let me start with Mr. Pukula. Your hand is up, Mr. Pukula.
Apologies, Chair. It's a lingering hand.
Okay. All right. Members, do members have any questions to ask on this submission for the compliance with the maximum price? By show of hands, members, if you have any. If not, members, can I then take you to the recommendations on page, it should be paragraph 14 on page 14. It is recommended that the PGS notes that virtual gas network complied with Section 21 for the period 1st July 2022 until June 2023 by charging its customers prices that are below the approved maximum price. of 298 per gigajoule, and that it has complied with Section 22 on price discrimination. By show of hands, members, if you are happy to note. Thank you, Mr. Bukula. Thank you, Mr. Gumede. Thank you, Ms. Mpungose. Thank you, Mr. Mkhize, and thank you, Advocate Sithole. I also support. We now move on, members, to item number 16. Item number 16 is the GTA 1 tariff for the period 1st July 2023 until 30 September 2023. That is for ROMCO tariffs. Please go ahead, introduce the submission.
Thank you, Chair. This is a report that we do every quarter where we assess ROMCO's GTA 1 tariff in line with the pipeline agreement. And also where we forecast the price for the following period. During the period that is under review is quarter 3 of FY23. So the purpose of the report itself is for the PGS Subcommittee to note ROMCO's GTA 1 tariff for this period. And from an assessment perspective, we have assessed the tariff, and ROMCO did comply over this period with the pipeline agreement, as they charged tariffs that are approved that were in line with the agreement itself. And then from the following quarter's perspective, there will be an increase of 0.76% driven by the PPI. The recommendations are as per line or number 14. Thanks, Chair.
Thank you, Mr. Njezula. Members, this is the ROMCO, and I think on the title there, it should be made clear that it is the ROMCO tariff, the monitoring of the ROMCO tariff, the GTA 1 tariff for ROMCO. If that can be emphasized also, so that it is very clear. Members, do you have any questions on this on this calculation for the quarter that is indicated there, ended September 2023? This one is monitored in terms of the agreement, the pipeline agreement. Any questions, members? If no questions, members, I would like to take you to the recommendations on page 8, paragraph 14. It is recommended that the PGS Subcommittee note the ROMCO GTA 1 tariff of 20.70 cents per gigajoule for the period 1st July 2023 until 30 September 2023. That is quarter 3 in terms of the specified quarters in the agreement, and the change there is influenced by the PPI as prescribed in the formula that is in the pipeline agreement. By show of hands, members. Thank you, Advocate Sithole. Thank you, Mr. Gumede. Thank you, Mr. Bukula. Thank you, Ms. Mpungose. Mr. Mkhize, are you still with us? I also support. Not sure if Mr. Mkhize is still with us, but thank you, members, for the support. I move on to item number 17, which is the update on the MRP, as well as the risk-free rate calculation for the period ended 30 September 2023. Please take the matter as read and emphasize any changes on the calculations of those two components.
Thank you, Chair. Morning once again, Chair, members of the PGS, executive managers, and fellow colleagues. Madam Chair, I'll take the submission as read. The submission before this committee really is an update on the market risk premium and risk-free rate calculations for the period ended 30 September 2023. The purpose of this submission is to request the PGS to notice submissions together with the publications of this report, Madam Chair. Madam Chair, the significance and the relevance of doing this or bringing this submission on a quarterly basis really is to address requests made by the stakeholders to say that in order to ensure consistency in the calculation of the risk rate and the market risk premium, the energy regulator really need to publish this information on a quarterly basis. And why we're doing that, Madam Chair, there seem to be a common trend, Madam Chair, so far with the applications that we have assessed already, Madam Chair, more especially with the emerging new players in the industry, where we saw that they seem to be struggling in terms of modeling the weighted cost of capital, because that calculation takes into account those two elements that we are reporting before this committee: the risk-free rate, the market risk premium. Madam Chair, really, this submission would sort of circumvent the discrepancies between the energy regulator calculations and the licensee calculations, more especially on the trading cost calculation, and because that also form part of the maximum price calculation. So we saw that a higher WACC has a higher bearing effect on increasing the licensee trading cost calculations, also the maximum price calculation. So we are saying to the industry to say that these informations will give them a directive in terms of the alignments when they bring applications to the energy regulator, more especially from the work perspective with the calculations, Madam Chairperson. So I'd like to really draw the committee's attention to focus on page 5 under paragraph 4.11, where, Madam Chair, we show a table there between the MRP and the risk-free rate. The MRP, Madam Chair, on this submission really took a knock by negative 0.3%. And whereas the risk-free rate also weakened by negative 0.01% from 30 June 2023 to 30 September 2023, Madam Chairperson, I'd like to take the members to our recommendations, which are found on page 7 under paragraph 14.1, Madam Chair.
Thank you.
Thank you.
Thank you very much, Mr. Malele. All right, members, this is just the calculation there, submission of the calculations of those two components of the work. It's useful for the maximum price and also the tariffs that are calculated, and also to ensure consistency and accuracy to a certain extent. Members, any questions on this submission? Are you happy with the calculations that have been done as shown on that table on page 5 and the recommendations? By show of hands, members, if you have any questions. If none, members, can I then take you to Mr. Pugla? I take it that that hand is a legacy hand. It has been up. Thank you, Mr. Pugla.
Apologies, Chairperson. Apologies.
No problem, Mr. Pugla. I would like to then take the members to page 7 on the recommendations, paragraph 14. It is recommended that the Pipe Gas Subcommittee notes the updated risk-free rate as well as market risk premium calculations for the period ended September 2023, and that is attached as Annexure A, members, and that these two components of the work will then be published on the NERSA website for access to stakeholders who may want to get that information. By show of hands, members, if you support those two decisions. Thank you, Mr. Kumede. Thank you, Ms. Mbungosa. Thank you, Advocate Stole. I also support. Thank you, Mr. Pukula. Thank you, members. We're now moving on to item number 18. Item number 18 was withdrawn. I'm sorry, members. We now on item number 19, which is the Sasol Gas's monthly gas volume balance report for the month of September 2023. Please take the matter as read and emphasize the key issues of this submission, and as well as any emerging issues with regards to the gas supply in Mozambique, which you may want to bring to the attention of the members.
Everyone, and thank you, Chairperson. The purpose of this submission is to request Pipe Gas Subcommittee to know the source of gas volume balance report for September 2023. The expected volumes for South African markets in terms of GTA 1, GTA 2, GTA 3 gas transportation agreements is about 13.4 million gigajoules. When factoring the volumes from other two importers, Kwande Gas and SSA, it becomes 13.6 million gigajoules per month. 2023, Sasol Gas imported approximately 13.5 million gigajoules of natural gas to the South African market. Imported volumes is below the expected 13.6 monthly volumes required to meet the expected 163.3 million gigajoules volumes in terms of the GTAs and the GSA to the importers. The percentage variance of September 2023 was negative 0.55%, which is not within the acceptable limit of the agreed international benchmark of 1%. It is recommended that Pipe Gas Subcommittee to know the following: the monthly gas volume balance report for September 2023, the amount of gas delivered to South Africa June September 2023, and the volume variance percentage as depicted in paragraph 14 of the submission. Thank you, Chairperson.
Thank you very much. Are we seeing an increase there, at least if you want, because of the additional gas there? Also, the fact that GTA 3 gas, the gas volumes were a bit low, but we seem to have gained 2.5 million. Is that correct? So that you can put things simple to the members, that with all of the gas for all the other years, and in terms of the GTAs, now since last year, August, it's to date, it seems we've gained 2.5 million gigajoules. Is that correct? So that they can see how the lower volumes on GTA 3 could be offset, and the fact that we're gaining some of the allocations that were for the Mozambican side.
Chairperson, yes, it is correct. There is an increase in the volumes. You're 100% correct.
Okay, but next time, if that can be clarified, I don't know where's Mr. Milatu and Mr. Ngumalo here, because these are some of the things when it comes to, and the committee has already voiced its concerns with regards to the tight gas supply from Mozambique and the risk of gas supply. So if we have now gained 2.5 million, and that comes from the previous allocations that were meant for the Mozambicans but are not utilized, and now they are reallocated to the South African market, that becomes important change which you need to bring to the attention of the members, so that we can see how that will affect the tariffs, and not just the tariffs, but even in terms of the levies that are paid, and all of that, and even the tax. So those things are very important for all of the submissions that are considered by this committee, but also by the finance committee for NERSA. So that becomes important. I'm hoping that these things will be put into perspective in the next meeting, including the submission that we have looked at today for Vuma gas, which is another additional gas that is likely to come to South Africa. Those things must be put into perspective so that members understand exactly what is happening with the gas from Mozambique, and also given some of the challenges with MRG, methane-rich gas, so that members are able to advise appropriately what needs to be done going forward. They need to be informed. All right, members, any questions on this submission, apart from the aspect of the gas supply, the security of supply? Okay, if none, members, I would like to then take you to the recommendations. The recommendations are on page. Where's the page for the recommendations? Page page 16, it is recommended that the pipe gas subcommittee note the following on table 3, that the volumes of gas that were brought in this month of September by Kwande Gas as delivered there, and also SSA. SSA is now another sort of Sasol Gas's sister company. With those volumes that are shown there. And then Sasol Gas volumes, they're about that figure, the red figure there. So members, that you can see that the figures have increased in terms of the monthly volumes of gas coming to South Africa for September. And the variance there is just above 1%. I don't think that it is, we'll look into whether this will be a trend or not. But members, are you happy then to approve, to note the volumes of gas brought by the different entities? It used to be Sasol Gas, now we've got 2 more. By show of hands, members, if you support. Thank you, Mr. Kumede. Thank you, Mr. Pukula. Thank you, Advocate Tolle. Thank you, Ms. Mbongose. I also support. Thank you, members. Members, this is the last submission for the open part of the meeting. I would like to then thank the members of the public who are following the proceedings of this meeting, as we are now going to close the live streaming, stop it at this point so that we can consider governance matters. Thank you very much for showing interest in matters, in NERSA's matters. We would like